All right, well, that V-shaped recovery that everybody was talking about is not happening. Sorry to break it to you, but they will still try to throw whatever kind of money they can at this system. And it might have you thinking, where do I need to put my money right now? So in this video, we are going to focus on gold. I am doing an updated gold video, and I'm also sprinkling in silver. So we're going to talk about gold and silver. Should you get paper gold? Should you get physical gold? What the hell is the silver to gold ratio? What can gold do for you? I mean, we're going to get into all of that and more. So please make sure you keep it locked. It's Crystal with the Cash Compass. All right, welcome back. I am here to teach you all the things that you should have learned in school about money, but for whatever reason, they forgot to mention it. Please be sure to subscribe because we talk about everything from personal finance to investing to the economy. Let's get into it. All right, so there are some things that I do want to kind of reiterate before I get into the juicy details. I did watch my other gold video, which if you haven't watched it, you can go ahead and click up here. Or no, you can click up here. I'm not going to repeat a whole bunch of things from that video, so you can definitely watch that for even more information. But basically, I made that video in January, okay? Gold was at $1,500 back then. It is now at $1,700, so that's a pretty nice gain for a couple of months. Also, it's important to note that, and I'll talk about this in more detail later, but the dollar to silver ratio and the dollar to gold ratio has tripled. Like I said, I will get into that. Some things that I did want to repeat from that old video is that gold, you have to look at it from three different perspectives, right? When I think about where I'm going to put my money, I think about it three ways: an investment, speculation, and wealth preservation. Gold can be played three ways, so it just depends on what you want it for. When I think about investments, I think about things that you can pretty much calculate your return on, right? So I think about real estate investing, where you can pretty much more or less guess what your income is going to be by using the market. You can also guesstimate what your expenses are going to be, and then you know that you're going to get this calculated return. Same thing with stocks, specifically dividend stocks. If you know you're going to have a certain amount of dividends coming in, you can calculate that. Obviously, none of these things are perfect. They can cut the dividends off and you cannot get somebody in your rental, but it's still easily calculated, and you can also kind of factor in those items and see, okay, well, if this happens, what will my return be? Speculation is something that you are just buying with the hope that it will go up, right? So you might have different factors that will tell you, okay, this should be going up because this company is undervalued or whatever, but you don't really know. You're only hoping that it will go up and then you'll sell at a greater price, right? So the speculation point is, okay, well, hopefully it goes up, hopefully I can sell it, and then hopefully I can get some returns. Whereas an investment is like, okay, I really should be getting this amount of money, and it gives me, a little peace of mind. Wealth preservation is kind of like car insurance. I did use this example before in one of my previous videos, but it's basically the idea of when you have car insurance and something happens to your car, you're not expecting to be rich all of a sudden. You're just expecting to be made whole, right? So it's the same exact thing when you think about gold as wealth preservation. It's not to become rich. It's just in an event of hyperinflation, you can at least still be able to maneuver the market. You can still be able to eat because gold tends to move with inflation, unlike other asset classes. All right, so let's talk about physical versus intangible. And this might be a little bit of a longer video. I hope you guys do enjoy these longer videos. I try to get more information in one thing, so it's not like, I don't know. Anyways, I hope you like it. All right, but let's talk physical and intangible gold. I personally think physical gold is the best form of wealth preservation. If you wanted to get into gold stocks, it can be investment or speculation. It depends. There are some gold stocks that do pay dividends, but the stocks that don't pay dividends and you're looking to just kind of see if things go up, that is speculation. Don't have anybody else tell you anything otherwise. You're just hoping that things go up, but you don't really know. So you can play, like I said, you can play gold three of those ways. Those gold contracts and those gold stocks, they are not actually backed up by the gold that they say that they have. At least depending on who you ask, because I've seen a couple of different figures, but the most conservative figure that I saw was 60-1. So if you're thinking that you're invested in 60 ounces of gold, you really only have 1 ounce of gold when it's time to potentially try to collect on that gold. So they do not have all the gold that they claim that they have, and that's already a problem. If you have physical gold, well, when you buy an ounce, you still have that ounce. Obviously, it can be stolen, but you're supposed to protect your assets. So, that can't really be manipulated. Once you bought it, it's in your possession. And a lot of these gold contracts, if you actually read the prospectus, which most people don't even know what that is, and those who do, they probably didn't even read it. But if you read it, a lot of them will say this is not really intended for long-term holding. You're supposed to kind of get in and out of these contracts as you see fit. So if you're in it for the long run, you have to really look into your prospectus and see if that is something that they would recommend, right? If the people who kind of curated this, gold contract tells you, don't hold this, then you probably should not hold it. So ultimately, if you're trying to use gold to maximize your profit, well, then you're going to absolutely have to maximize those efforts too. It's going to be an active thing. When I buy gold, I kind of just collect on it, right? Most people who are into precious metals, they're stacking. You don't really have intentions to get in and out of this market. You just buy and hold. But with stocks, you have to buy and monitor. It's not a set it and forget it thing with any stocks, not even just gold stocks. Please do not just set your stocks and forget about them, okay? That's like the biggest no-no. But you do have potential to get a lot of gains. There are a lot of people who invest in gold mining stocks, and they have seen great returns from that. So, this is not that kind of video. If you guys do want a video that goes more in depth about physical versus intangible, I can get into it, but please know that I am a strong proponent of having the physical thing with you. Gold and silver have performed very handsomely this year, even though silver had gotten an absolute beating. Kind of when the market took a beating, everything took a beating, but silver really got pummeled. But that was only the paper silver. I was also kind of searching around. The premiums were out of control. So it's important to know when you're seeing those gold and silver prices, that is the spot price, which is the paper price. You will almost never pay that price when you are going to get the physical stuff. There is always a premium. Silver has the worst premiums, but it's also much more affordable. Gold's premiums are a little bit more reasonable. And that was confirmed also when things took a big tumble, because the silver premium was something like, 50% increase. So if you saw it for $10 in the paper market, which it wasn't $10, but if you saw it for $10 in the paper market, it would have been $15 when you actually went to go buy it. So it doesn't sound like a big difference, but that's a 50% increase, which is ridiculous. Okay, now I want to get into those dollar to gold and dollar to silver ratios that I was talking about earlier, right? So in my video from January, you can see right here that the dollar to silver ratio was around 1100 and the dollar to gold ratio was around 9200. Well, let me explain what this is first. This is basically saying how many dollars there are in the world compared to the amount of gold in the world, right? Just to keep it kind of simple. So back in January, for every 1 ounce of silver, there was $1,100 in the world. And for every 1 ounce of gold, there was $9,200 in the world. Like I said, those things have 3x right now. And now we are looking at silver being at 1 ounce to almost $3,200, which is crazy. So between January and June, which is not a long time, right? The dollars in circulation have tripled in comparison to the ounces of silver that are available. And the dollar to gold ratio is not much better. For every ounce of gold, there is $26,000 now in circulation. Wow. I've said this before for all my science people out there, when they say energy is neither created nor destroyed, it's merely transferred. Bear with me. I haven't had science in a long time. But it's the same thing with wealth. Wealth is neither created nor destroyed. It is merely transferred. When your stocks go down, you did not lose that. It was transferred to somebody else's account. Okay, the wealth came out of your pockets and into someone else's account. You didn't lose it. It was transferred. So when they are creating all this extra money, it is not creating more wealth. It is just diluting the existing dollars that are already around that we're using, right? So that's why you see inflation happening, because the dollars are worth less because they're creating so much more. And if you have too much of something, it just becomes useless, honestly. So then they have to kind of up the price. So what you could have bought in the 90s with a $20 bill would be dramatically different than what you could buy now. But just know that history has shown that gold can weather most, if not all, economic storms. It has been here since I literally don't know, but it's been here way before we were here, okay? And it will continue to be here past when we're here. Now, I didn't forget about silver. I know I talk about gold a lot because that is the main monetary metal, but silver is also a monetary metal and an industrial metal, because almost every single industry uses silver in some shape, form, or fashion, you probably have a little bit of silver on you right now in your cell phone and you ain't even know it. Now, because of its industrial piece and the fact that it's a much smaller market, it is more volatile, right? So if it's just you and I invested in one company, if I pull all my money out, well, then that's a 50% drop, right? So it's more volatile because it's only two players in the game. But if you have like 100,000 people in there, if I pull it out, it won't really make much of a difference. And because of that industrial use mixed with the fact that it's a smaller market relative to gold and other type of assets, that is why it's extremely volatile, right? Because there's only a small amount of people really in there. So if like a big player takes all their money out, well, then it's going to tank because it's not a big market. So any small moves can actually make a dramatic difference. A lot of people are going nuts telling you that you should be buying silver right now over gold because of the gold to silver ratio. And the gold to silver ratio is basically how many ounces of silver does it take to buy 1 ounce of gold. And I actually want to do an updated video live right now because when I checked last, it was 96 to 1, which I'll get into, but let me just double check. So basically the gold to silver ratio is at 96 right now. So you would need 96 ounces of silver to get 1 ounce of gold. Now that is dramatically high. It's come down from its record highs, but it's still high considering that the 220-year average is actually 47 to 1. And even if you use something a little bit more recent, it's 60 to 1. So, I mean, from 60 to 96, that's a pretty big difference. So a lot of people are saying you should buy silver right now while it's 96 to 1, because once that ratio comes down, you can actually sell your silver and exchange it for gold. I want to use some numbers because saying it outright, I already kind of confused my damn self. I'm going to do everything at spot price because it's just simpler that way. But like I said before, you won't really find it at spot price, but let's make things simple. As I'm recording this, the silver price is $17.57, okay? If you were to buy the 96 ounces of silver, it would cost you $1,686. That can get you 1 ounce of gold right now. If the ratio were to come down from 96 to 47, which is the, 220-year average like I mentioned, well, now that $1,600 that you spent can actually get you 2 ounces of gold, which is crazy because you can pretty much kind of buy gold on a discount in a way, right? If you kind of trade in all that silver and buy your gold, now you have gotten 2 for the price of 1. The gold and silver you see on the stock market is heavily manipulated in our favor, okay? They put a lot of downward pressure on these prices. So the dollar to gold and the dollar to silver ratio that I showed you, could it get that high? Yes, a lot of people are actually arguing that gold will see $50,000 or something like this. But whether it can get higher or not, it's heavily manipulated downward, which is why it's a great, opportunity right now to take advantage of making those purchases. Obviously, do what you're comfortable with. I'm not giving anybody specific financial advice. I also personally like silver because I do think it's a smaller amount to work with. I don't know that I would want to trade in a whole ounce of gold to go buy like a loaf of bread, right? But like silver is smaller, it's more manageable. More people will be more likely to kind of, barter, or even you can sell it in smaller quantities that way. I wouldn't want to, whenever I am ready to sell anything, I wouldn't want to sell, big pieces like that. So having silver at little $20 pieces is pretty easy to kind of liquidate as you see fit. And like I mentioned, it's still considered a monetary metal, so it will still protect your value. I think in that other video that I mentioned, or maybe in my cryptocurrency video up here, I kind of went into a detailed example of how silver has protected your purchasing power. So it can still actually protect you in times of runaway inflation where your money is becoming worthless literally day by day. Ooh, this is long. Another question is, where would you sell it at, right? Because if people are telling you, oh, gold's gonna go to $5,000, $10,000, like $50,000, who's gonna buy that? Okay, who? And it does sound crazy, but you have to remember in 1970, which a lot of people are still alive from 1970, okay? Gold was $50. And if you were to tell somebody in the 1970s, hey, this is actually going to be worth, $1,700 one day, they would look at you like you're nuts and probably say the same thing. Like, who would buy that? That's too expensive. But now look at us. And it just basically goes back to inflation, okay? So if it were to go to 5,000 or 10,000, that would be a reasonable price in that environment, okay? So 1,700 is a reasonable price for us at this environment because our money has inflated so much. So it's very possible that gold can go up to $5,000 and $10,000. That doesn't mean you're making like a gain, for example. Like I said, it protects your purchasing power. So you would still be able to buy what $1,700 can buy you right now. Also, gold is used across so many different industries. I will put a screenshot here to show the different industries that gold and silver are used in. So there's going to be demand, at least in some sector of the economy. Hopefully we're not all shut down again. I don't want to jinx anything. Where's the wood? So I do think that there will be people willing to sell to you. People also sell it on eBay. I don't know about that. But the same dealer that you bought it from, you should be able to sell back to. You have to just talk to them. A lot of them will actually list their sell prices right there on their website. I've personally used AppMex, I've used ITM Trading, and I've also used a local coin shop. I will put the two that have a website in my description if you want to check them out. I don't get paid for any of that. That's just literally my experience. I like AppMex the best, so check them out. So what is my game plan in all of this, right? Like I mentioned, I think enough times, it's wealth preservation. I have no intentions on selling this stuff until I think that it makes the most sense to, right? And for me, that'll be when I see some prices going low, like maybe real estate has taken a tumble and gold has had a nice little return, then I would want to maybe, liquidate some of my gold. But I do plan on holding on to gold and silver. I do like them both. Think it's kind of cool. I definitely think, do what you're comfortable with, but I definitely would say consider buying it. Just get it. Once you get your first one, trust me, you will be looking into it a lot more. And then the more you kind of research, the more you're like, shoot, like I probably should buy some more. I do think I will be buying a little bit more silver than gold. I haven't made a purchase in a little bit of a while. I just think it was getting a little out of hand. I wasn't really comfortable paying those prices, but I really don't know. I couldn't tell you if things are gonna go up or down tomorrow. But tell me what you guys think. Let me know if I answered your questions. If you have any more, please drop them down in the comments below. And that will do it. If you like this video, then please like this video and be sure to subscribe and share with your friends. And if you have anything else going on, you know what I'm gonna say. Go ahead and binge watch me. And until next time, keep your money up.